Good morning, friends. I am Devash from HDFC Securities. In this video, first I will take you through key developments. Then my colleague Vinay will share his views from technical perspective, and then Ajit will share insights from derivatives. After that, we'll go through budget expectations and try to conclude. So, without further ado, let's start. Key developments over the last fortnight include the quarterly earnings results continue to pour in from technology companies. Big layoff announcements continue, and latest being the large layoff from Google, which has worried the market, and these are heightening the concerns about a recession going ahead. In the US, the national debt ceiling negotiation has aggravated the sense of anxiety among the investors, and now measures are being taken to meet the debt obligations. In a surprise announcement, Japan's central bank maintained its ultra-low interest rates this week. Market was expecting something hawkish to come out from the Bank of Japan's meeting, but Bank of Japan decision defied the expectations, and that resulted into the Japanese market catapulting higher this Wednesday. Now let's look at the various indices and instruments and how they have fared over the past fortnight. So dollar continued to remain weak. The USD INR continued to appreciate, and now it has reached levels beyond 81 in Indian markets. The American market continued to recover. The S&P and the Nasdaq had a strong up move on last few sessions of the week. Internationally, as we mentioned, the Germany and other European markets are surging. Chinese market is one of the most outperforming markets right now. From the bottom they made in the November, they have had a stupendous rally. So I showed you this chart for the Bitcoin. It was struggling around 16,900 levels in our last video. Now let's look at what has just happened in last fortnight in Bitcoin. From 16,900, a sharp rally towards 23,300 has materialized in Bitcoin. Let's look at what is happening to various indices. So, as you can see from the screen, let me zoom in here. The US markets have recovered. Markets like Nasdaq are up about 5% over the last 1 month. Many markets like UK, Germany are doing quite well. And as I mentioned, China and Hong Kong are surging, and Hong Kong markets are up about 15%. Now, contrast that with what is happening into India. So, Nifty Sensex are down by about 2% over the last 1 month. Mid cap is down by 3%, and small cap is down by 4.5%. Over the last fortnight, the same kind of trend continues. Nasdaq has recovered by 5%. Hang Seng is also again up by 5%, while Indian markets are consolidating. Within the Indian markets consolidation, there are some sectors which are contributing towards the outperformance, and some sectors are underperforming. Let us look at them. So, consumer durables and FMCG are the one which is down by 3.5% to 5% over the last 1 month, and they continue to underperform for last fortnight as well. IT and metal are the top performer. Metal and IT have gone up by 5% over the last fortnight, and if you see, IT is up by 3% and 6% outperformance over the last 1 month. So, as we have mentioned about it in the past videos, where IT was underperforming, that it is likely to pick up the pace, and exactly the same is happening. We continue to forecast that the IT continues to be remain relevant in 2023. India will celebrate the Republican Day on 26th of January, and the markets will be closed. So next week we have a holiday shortened week. On 31st of March, important data of fiscal deficit and core infrastructure will come out. So 31st January is important. So on the 1st of February, union budget is there, and what are the expectations of the budget? We will take it in the later part of this video. Now, let me hand it over to Vinay to share his views from the technical perspective. Over to you, Vinay.
Hello friends, myself Vinay Rajani, Senior Technical and Derivative Analyst at HDFC Securities. Today I am going to share a technical outlook on the Indian market as well as on the global markets. I will also go through some intermarket analysis which are interrelated with the Indian markets outlook. So let us start. So friends, this is Nifty daily chart. As we can see over here, this is a downward sloping trend line which is providing a strong resistance over here. This resistance is placed at 18,185, and if we were to look at the support, this is a multiple bottom support around 17,750 odd levels. So this is a typical descending triangle which is being formed on the Nifty daily chart, and above 18,185 we can see some momentum buying coming in. So Nifty long should be held with a stop loss of the strong support of 17,750 right now. So this is a Nifty weekly chart which shows the medium term time frame. As we can see over here, this oscillators and indicators are showing weakness on the weekly chart. This MACD is sloping downwards and below its signal line, and RSI has been gradually going down. As far as candlestick patterns is concerned, for last 2 weeks Nifty has been making two consecutive dojis. So this shows the indecision between the bears and bulls right now, and we are right now consolidating in a tight range of 17,750 on the downside, on the upside 18,265. So we have to see whether we are breaking out on the upside or breaking out on the downside. Now let us look at Nifty on the monthly time frame. This is the monthly chart of the Nifty, and this was a bearish engulfing pattern which was formed in the end of the December 2022. Now this candlestick pattern is having a negative significance and implications in the market, and this is formed on the Nifty monthly chart, so we have to give respect to it. So at higher levels we can say that Nifty will continue to face resistance, and 18,500 to 18,600 will act as a strong resistance going forward on the medium to long term time frame. So let us now analyze Bank Nifty on a shorter time frame. So friends, for last 11 trading sessions, Bank Nifty has been trading in a 1,000 points narrow range. So choppiness was there in last couple of weeks, and still it is continuing. We need to see in which direction Bank Nifty will break out. But overall picture is like that. Bank Nifty is forming a symmetrical triangle on a daily chart, where we have seen resistance at 43,100, on the downside 41,700. So we need to see in which direction Bank Nifty is giving breakout. So 43,100 is a strong resistance and hurdle for the Bank Nifty, and 41,700 is strong support, below which the Bank Nifty trend would turn bearish. Now friends, let us do some intermarket analysis. This is a dollar index monthly chart. Now dollar index has negative correlation with the gold as well as the global equity markets. As we all know, in the year 2022, gold has outperformed the other asset class with a huge margin. It was the only asset class or underlying which did very well in the year 2022, and the indices like Nasdaq and many Asian markets saw a significant negative returns in the month of year of 2022. So now what has happened in the recent past? Now this dollar index, which did very well in 2022, has started falling. The recent top was made at 115, and now it has reached below 102 odd levels. So continuous fall we are witnessing in the dollar index. Now as I said that it is having a negative correlation with the gold. Now gold is breaking out on the charts and giving good momentum on the upside, and world equity markets and especially the emerging markets has started doing very well, which we will see in the coming slides. So I was mentioning about the gold, and gold can outperform because the dollar index has been underperforming right now. So this is a monthly chart of MCX spot gold, and we saw that in the month of December 2022 there was a clear-cut symmetrical triangle breakout on the monthly chart, and in the current month of January it has seen some follow-up buying coming in, where we have seen a new all-time highs in the MCX gold. Now currently MCX gold is trading at 56,700. The pattern target comes in beyond the 60,000. So overall momentum is there in the gold, and we can expect gold to outperform the equity markets as well. So this is a emerging market monthly chart. As we can see over here, in the year 2009 there was a huge bottom in the global markets, and if we were to adjoin the trend line with that bottom, And if we were to take a recent bottom of 2020 when pandemic low was made, this support was there around this level. In the year 2022 it found support at this trend line and bounced back sharply. So in the current month, emerging market has outperformed the Indian markets in a big with a big margin, and that trend is still continuing and it looks strong on the charts. So from the long term support, MSCI emerging market index has bounced back, and this rally is likely to continue on the in the coming time. Friends, now let us conclude. There are some positive development as well as there are some negative development also. So we let us discuss it one by one. So technical setup of global market is bullish right now. Indian markets have been underperforming the global equity markets. Dollar index DXY has broken crucial long-term trendline support of 103, which augurs well for the gold as well as the global equity market, especially the emerging market. MCX Gold has broken out on the long-term charts and likely to continue its momentum further. We can expect a level up beyond 60,000 in MCX Gold. Emerging markets are expected to outperform in the near term. Nifty is consolidating in the range of 17,750 and 18,200. Any level above 18,200 could pull index towards the 18,500 levels. Longs should be protected with a stop loss of 17,750 in the Nifty. Bank Nifty is trading in a narrow range of 1000 points for last 11 trading sessions. Bullish breakout is seen above 43,100 while bearish breakout is seen below 41,700. So Indian markets are passing through the indecision phase right now. Traders are advised to hold long position in Nifty with 17,750 stop loss. On the upside, 18,200 is a immediate resistance for the Nifty, followed by 18,500 for the positional traders. So that is all from my side.
Thanks, Vinay. Now let's go to Ajit to learn about market developments from derivatives. Over to you, Ajit.
Good morning, everyone. This is Ajit Nayak, Technical and Derivative Analyst at HDFC. So today we'll discuss about the outlook on the markets from a derivative perspective. So during the week, what we have seen? We have seen the long build-up in the Nifty futures, but it was very minor long build-up, where open interest has risen by 0.33%, with open interest rising by 0.04%. Similarly, we have seen short covering in the Bank Nifty futures, where open interest have fallen by 5%, with Bank Nifty rising by 0.32%. And the most interesting part is the put writing. Put writing has been seen at 17,800 to 17,700 level, and we have seen call build up, call writing at 18,200 level. So this suggests that market could be in a range bound movement where we can see good support at 17,800 and immediate resistance around 18,200. This can be very well explained with the help of the open interest distribution chart. So what we can see here is like 18,200, there is a huge call buildup, and near 18,700 to 17,800, there is a put writing. If we look from a open interest change perspective, we can see that the price has fallen down, whereas the volume and the open interest has gone in terms of call. And similarly, in terms of put near 17,800, the price has fallen down and open interest has gone up. This suggests there is a huge put writing near 17,800 to 17,700 level. FI data too suggests that they have created a long position in the market where they have bought 2,894 contract worth rupees, while open interest going up by 13,334 contract. And they have also created a long position in a stock future segment where they have bought 1,200 contract with open interest going up by 85,360 contract. So they are buying in index futures as well as in stock futures. This suggests that market has high tendency that it will breach 18,200 level, but we have to play accordingly to our level, that is taking support would be around 17,800 and resistance around 18,200. So if we look at from FI's long to short perspective, it has risen sharply from 0.56 to 1.11 level. That was happened on 0.56 was the lowest in the month of Jan 4th, and currently it is 1.11 level. It means they have created fresh long position after 14 days. So this suggests that the market, the base has built up in the market due to the positions of open interest positions of FIs. On the contrary, the client has been reducing their long since 4th January, and at the same period, the FIs have started increasing their long position, which argues well with the market. So to sum it up, we can accumulate long position on decline with a stop loss of 7,700, because we have seen long build up in the Nifty futures, put writing at 17,800 to 17,700. FIs have built up their long position in index as well as in stock futures, and overnight positive global cues indicates that market can give a gap of opening on Monday. So, and we have to be also a very stock specific approach, because even in this rally, only few selected stocks are moving up. So last week we have seen a good rally in the metal sector as well. So we have to be very stocks. We have to be a very stock specific approach while choosing our stocks. In Bank Nifty, we can be remain bullish with a stop loss of 41,600 level, because we have seen put writing at 41,700 to 41,600 level, and immediate resistance is in the vicinity of 42,800 to 43,100 level. Any close above 43,100 level would result in the further short covering, which might push Bank Nifty to 43,700 level.
Thanks, Ajit. Now let's look at the budget expectations. So 1st of February, Union Budget is going to come out. This Union Budget will be the last full year budget from the government ahead of the elections due in 2024. So the fear is that the government may turn very populist and announce large schemes. Let's hope that they stick to the fiscal consolidation path and do not go overly populist because of the election consideration. We don't want them to tinker with the capital gain taxation, and this is a big worry. Now let's conclude. As I and my colleagues have showed you, the dollar is weak. Emerging markets are, especially the China, is surging. Compared to that, our Indian market is underperforming. We believe that markets are awaiting cues from the union budget. Once the union budget is out, depending upon the provisions of the budget, we may expect a sharper move. The support for the Nifty comes in at 17,750, while the support for Bank Nifty is at 41,600. So these are two important levels, and for markets to remain strong, they should hold out. That's all for this video. We hope you like this video and find the information provided useful. If you have any comments or suggestion, do reach out to us. Thank you.